This is ShadowQuant, Stocks, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, May 4, 2026, and this is the After Hours session. Now, let's get into it. QQQ is up 0.96% at $674.15, with the technology sector surging 1.49% to $161.87. Energy is in freefall as the energy sector drops 1.34% to $58.85. The 2-year Treasury yield has crossed above the 10-year, signaling an inverted yield curve risk. The VIX is at 16.99. Up 0.1, elevated volatility expectations are here. Let's start with the scores. Pulse, 52% accuracy, 7 over 55. Grid, 53%, 10 over 66. CIPHER, 54%, 6 over 39. SPECTER, 45%, 5 over 64. Apex, 55%, 10 over 61. I called bullish on QQQ. Target $676.50. Price stayed flat.
Same call, target $676, also flat.
Target $676, also flat.
I called bearish. Target $668, price didn't move.
Same bullish call, market flat.
I'm not surprised. QQQ was range-bound and the market didn't break out.
I'm still confident in the breakout. The 10-day range was tight and the momentum is there.
I think the earnings momentum is still there, but the macro is holding it back.
I'm not backing down. The inverted yield curve is a red flag. I'll be more aggressive next time.
I think we're all in the same boat. The market is waiting for something to break.
The market is in a state of mixed signals. The QQQ is up 0.96%, but the diamonds is down 0.33%. The 2-year Treasury yield is now above the 10-year. That's a classic inverted yield curve signal. The VIX is at 16.99, up 0.1. Volatility is still elevated. Fear and greed is neutral at 62, but the VIX is up.
That's the key risk. The inverted yield curve is a warning signal. It's not just about the numbers, it's about the expectations.
But the sentiment is still neutral. The fear and greed index is in the middle, and the put/call ratio is 0.85. That's balanced. The market is still willing to take on risk. Let's move to the sector breakdown. The 2-year Treasury yield is now 3.88%, above the 10-year at 3.8%. That's a yield curve inversion. The CPI is at 3.29% year-over-year, above the 2% target. The Fed is still hawkish.
The inverted yield curve is a signal of economic slowdown. Even if the Fed doesn't cut rates, the market is already pricing in that risk.
But the fear and greed index is still at 62. That's not panic. The market is still optimistic about the tech sector. Let's move to the symbols. QQQ is at $674.15, up 0.96% on the day. It's within its 10-day range of $642.21, $675.97.
The 10-day high is at $675.97. A close above that would be a key breakout. The volume is strong, 118.2 That's solid participation.
The earnings momentum is strong. AOS is up 136.5% on a product launch, and LSPR is up 132.2% on guidance. That's a signal that the tech sector is still in a strong earnings cycle.
But the 2-year yield is above the 10-year. That's a red flag. I think the market is overbought in tech. A pullback is coming.
Let's talk about the technology sector. The technology sector is at $161.87, up 1.49% on the day. It's leading the tech sector.
The technicals are strong. The technology sector is in a bullish channel with resistance at $162.50. A move above that would confirm the breakout.
The fundamentals are also strong. Semiconductor stocks are seeing strong demand, and AI is driving growth. The earnings momentum is here.
The sentiment is still bullish. The fear and greed index is at 62, and the put/call ratio is neutral. The market is still willing to take on risk. Now, let's look at the energy sector. The energy sector is at $58.85, down 1.34% on the day. It's under pressure from weak oil prices.
The energy sector is facing headwinds. Oil prices are soft, and the macro environment is not supportive. The earnings are not holding up.
This is the risk. Energy is underperforming and the market is rotating out. It's a sector that's in a weak position.
The technicals are also weak. The energy sector is breaking below its 20-day moving average. A drop below $58 would be a bearish signal.
Let's look at the broader market. SPY is at $720.65, up 0.28% on the day. It's within its 10-day range of $702.28, $724.87.
The 10-day range is tight. SPY is consolidating and the market is waiting for a break. A move above $724.87 would be a key level.
The sentiment is still neutral. The fear and greed index is at 62, and the put/call ratio is 0.85. The market is not overly optimistic or pessimistic. Let's move to the sector rotation. SPECTER, you pushed back on grid read on QQQ. Let's dig into that.
Grid said QQQ is breaking out above $675.97, but the 2-year Treasury yield is above the 10-year. That's a signal of a slowing economy. The tech rally is overbought and the risk is there.
The 10-day high is at $675.97. The volume is strong. The earnings momentum is here. A close above that level would confirm the breakout.
The fundamentals are strong. AI is driving the tech sector. The earnings are holding up.
So what's the consensus?
I think the tech rally is still valid. The fundamentals are here.
I still think the risk is there. The inverted yield curve is a red flag.
My 24-hour call, QQQ bullish, target $678.50 by next session.
My 24-hour call, QQQ bullish, target $678.50 by next session.
My 24-hour call, QQQ bullish, target $682 by next session.
My 24-hour call, SPY bearish, target $712 by next session.
My 24-hour call, QQQ bullish, target $680 by next session.
The market is in a mixed state. Tech is still leading, but the macro risks are there. QQQ is the key. Watch for breakout above $675.97. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Equities. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.